Hello and welcome to the weekly wrap-up. Joining me to discuss the market movers is Adam Button, Currency Analyst Director of ForexLive. Greece repaid the IMF the 450 million euros it owed this week, but given there are yet more deadlines looming as early as next week, has there been any market relief, and how would you describe market sentiment at present?
Yeah, the market has shifted its focus away from Greece in some sense. It was a surprise to see the lack of euro concern on the numbers. Now, Greece went out and raised €1 billion in 6-month bills. That gives them some breathing room probably until May. Now, the big focus will be on the 24th of April. That's when finance ministers meet in Latvia. And that will really be when we decide Greece's fate. So I expect to see rising concerns into that meeting. But in the short term, I think Greece will stay off the front pages and will stay out of the market's mind. Instead, we'll be focused on what's happening with QE. I think the market might have initially even underestimated the impact of QE in Europe. Despite the massive moves, it's becoming clear now that the euro's back on its back foot. And with yields at zero, it really creates some incredible forces in Europe, and that's going to weigh on the euro for the time being, and Greece may weigh further towards the end of the month.
The Hong Kong stock market shows no signs of showing down, as gains have continued into its 7th day today. Spurred on by surging Chinese demand for shares in the former British colony, the Hang Seng Index now looks poised to overtake Japan as the world's 3rd largest stock market. How long can we expect to see this trend continue, and what impact is this likely to have on the global economy?
This ties back into Europe, like I was saying, and it's key that cheap money is flowing, and it's flowing. If you're in Europe, you look at bond yields, you don't get anything, or you pay to hold bonds, and it's forcing people into things like stocks, especially in Europe where there's so little corporate debt. And we see it flow overseas. Now, Hong Kong has some special factors in opening up and some regulations that are driving the latest move. But we saw the Nikkei today hit 20,000 for the first time in 15 years. The French CAC yesterday hit a record. So money is flowing into stocks, non-commodity related stocks, and I think that's a tremendously powerful force that will continue throughout the year. Not necessarily into the U.S. Because of some dollar concerns, but elsewhere, and anything, especially China, that can hold alongside the dollar, where you're not going to see so many FX risks like you might in Europe. That is so cheap that company shares will continue to rally, and I think they're going to create some incredible flows. We saw, Wisdom Tree has an ETF that tracks U.S. stock market or European shares in hedged against the U.S. dollar, and I think it's risen. The amount of money in it has risen 15 times just this year. So there are massive trades looking for these cheap money trades, and it will continue to slosh around, and much will end up in China.
Lastly for today, China's consumer price index data for March continued to languish at 1.4%, with failing oil prices doing little to help Beijing try to reach its target of 3% inflation. With China's GDP data out next Wednesday, are you expecting further disappointment?
It's a big report. There's some talk they could cut rates after that report. CPI was a touch higher than expected. It was expected at 1.3%. Saw a bit of disappointment, but only momentarily in the Australian dollar after that. There is a substantial amount of easing priced in China, but the messages from the central bank are mixed, and it's, at this point you'd like to see it happen before you continue to make a bet on the Australian dollar or on China. It's a wait and see sort of trade on China at the moment, but I think a bit softer on GDP, something below 7%, or right at 7%, would maybe spur that kind of action. That would give stock market investors a little bit more confidence, and maybe give the Australian dollar a boost as well.
Thank you, Adam. For more updates and to see how the markets are shaping up next week, join Monica Gibson for the week ahead on Monday. Goodbye for now.